in Kenya, we belong to the East African region, which covers Kenya, Uganda, Tanzania, Rwanda, and Ethiopia. So what problem does Bifan address? As you can see from our presentation, on the left side, there is a limited supply of investor-ready projects. And also there's also an oversupply of poorly structured projects. This is due to lack of financial and commercial skills by the project developers. And this is a big challenge because no investor, on the right side, we have the investors who are looking for projects to invest in. And one of the challenges that most project developers find is that capacity to develop their projects to bankable level for the proposals. So we in Bifan, we are in the middle there. We are the ones who provide those services to our project developers for them to be able to develop bankable proposals professionally done, which are able to be presented to the investors. On the right-hand side, we have large supplies of financing, and they are developing investment cultures and risk assessment. And also we have a limited number of successful exits in this space. So we in Bifan, we advise those climate resilient businesses in developing countries and matches the projects to appropriate private financing. So how does Bifan work? Bifan offers coaching and investment facilitation, and these are provided at no cost to the entrepreneurs. We have a fixed fee for our advisors who we engage with for every project which have been approved. And the fees, as I said, Bifan pays for it. And we have an extensive network of investment and network partners. We are hosted by UNIDO and the RIP since 2016, and which was initiated in 2006. So we are funded by multi-party trust fund and supported by those organizations there, the Swedish government, the Australian government, the USAID, and the Norwegian Ministry of Foreign Affairs. We have partners in countries like in Kenya here, we have partners like CCAK, KCB, and the other investors, other supporters. So how do we engage with businesses? So what we do is that we do what we call assessment of investment potential for the businesses through our Bifan advisors. And these are people that who have been engaged, who are professional, both in technology and financial expertise. And they assist the potential in the project developers in preparation of and finalizing of project development documents, the business plan, visibility reports, standard reports, technical support, standard support report, and financial modeling. And we also do identification of potential investors and financiers. And every year we have what we call investment forums, where we are able to bring your project in the presence of investors. These are bankers and other investors. And this is, we do it through investor roadshows. And right now, because of this challenge of COVID, we are doing these things on virtual, and some of them on one-on-one introductions. We have what we call investment facilitation, that is structuring and negotiation of deals with investors to reach financial closure. And this is very important because with our partnership with most of the international organizations, we are able to show that your project is viable and investable. So because we provide professional advice with proven methodology and local and global understanding. So what is the process? The financial process, the financing, the Bifan process is that we do what call from submitting a proposal to financial closure. So we start with the number one, the open-ended call for projects. We in our 12-month period, we have what call for projects, which is open-ended. You can submit your project into a pipeline anytime within the whole year. Then we do what we call the project evaluation and selection. After the project is evaluated and selected, then it goes to business coaching. This is where now we identify a coach for your project who will work with you and support you to develop the proposal for you for possible financing. And then from there, we do what we call the financial closure. After we have the projects have been evaluated and they are taken by the investor. We have also what we call tipping point technical assistance. This is an assistance that we give to projects to support them, either to get legal support or any other support that they may require for them to have the project take off concluded. And we also do what we call investor introductions. So one of the other thing is that in our Bifan, we do what we call gender mainstreaming. As you know, we do from the UN sustainability, we recognize that it's not only a responsibility, but also an opportunity to contribute towards the overarching goal of gender equality and the empowerment of women within its internal operations and market-facing activities. People and advisors are therefore receive capacity building and training with regard to gender. As you know, climate change affects women more than even other genders. So we are very, Bifan is very consistent to encourage entrepreneurs and investors to become more gender sensitive in our projects. And we look at Cooking's CCAK as a very important partner because they deal with a very important part of investment in cooking stoves, clean cooking stoves. So what is our track record? Since since Bifan was incorporated, we have a track record. We have reduced GH emissions, and we also contribute to Paris Agreement on Sustainable Development Goals. We are actually mainly on SDG 7, which is energy, number 9, industry, number 13, climate action, and 17 in partnership. We have supported nearly over 1,000 projects with more than 300 projects in the current pipeline. And many of our achievements since inception in 2006 are, we have a total investment of $2 billion US. We have about 155 number of projects that have raised financing, and our success rate is about 17%. As you can see from the chart there, we have been able to mitigate about 4.1 million metric tons of emissions, gas emissions. So we have success stories in West Africa. We have projects in West Africa, and even here in Ghana, and here in Kenya, we have success stories. We have some projects now going on in hydro, the one in cook stoves, and in cooling. And we are looking forward to engage more with members of CCAK in terms of engaging with them to upskill their operations. We look forward. So what is our journey? The Bifan journey is to get the investors to meet, to project developers to meet investors. And once ready, when the projects are ready, and then to introduce them to the financiers. Our projects are time bound, they're flexible. We start with projects from green projects at whatever level you are. We are able to work with you, and we provide all those services, working with you at every stage. At the end of every stage, if your project or business is not ready to progress to the next level, we will provide guidance on the steps for you and your projects to pursue. An update will be scheduled so that you may progress into the next stage when you are ready. So depending on the regional and the global event schedule, you might participate in one of the major events that we organize with our partners, as like this webinar, or project development workshops, investor forums, and the other activities in the sector with the investors. So our journey also starts now with the stage 1, where we do what we call the action plan. We recommend that you introduce yourself, your organization, or your company. We verify your project, the status that it needs, and we look at the data that you have and to see how you are doing. Then we do the stage 2, which is now project development, where now we experience advice on business model and financing alternatives, documents that you may need for investors. And then the stage 3 is where now we do what we call the investment facilitation, where the finalization of the investor presentation, identifying and enabling the target investment introductions. And the outcome is that you have a detailed action plan to get your project and business ready to meet the investors in action 1. The number 2 is that we improve the business plan and the financial model, the financing of investment structure for investor-ready projects. The outcome is that you will have the financial investor presentation and the target investor introductions. And then after that, there will be now, of course, the signing of the bilateral success fee agreements. All these costs to us are paid for by our supporters, I mean, the people that support us. So we are looking forward that we can work with you people, most of the investors in this industry, to support you to get to that financial closure. So how can you make best, how to make the best of what we offer? If you have a project to get off the ground or a business to run, your time is limited and precious. So we would like to work with you, get in touch with you, and you in touch with us. We can cooperate and then move on to make your business plans bankable. And maybe after my presentation from one of our coaches, George, who is coming after me, I will give you a brief of how to apply for support for services. In the meantime, you can engage on our website, which is on the display there. And the one thing that we would like to mention is that we are technology neutral. We don't prefer, so long as your technology is acceptable for climate change, and the investment we ask up to the maximum is 50 million, and the smallest project, the micro projects, is $1 million US. But we can go down for projects like the in cooking stoves. We can go down to maybe even have $1 million US. And all the projects should be submitted through our email, Climate Invest. So after this presentation, I'll be able to share with you how you to apply. This presentation will be given to you so that you can see all the technologies and the sectors that we support in the presentation. So thank you so much. And because of the time, we can look at just one, what we call about the assessment criteria for your project to go forward. You can see from there that the business modeling, the value proposition, the market understanding, the management team, the operation, the financials, the risk mitigation, the gender and the environmental social benefits, professionalism, and presentation of a proposal. all these are the points that you will be able to help us to evaluate your project. So thank you so much. And if there are any questions, please raise up with the chat. Thank you so much.
Thank you very much, Patrick, for that elaborate brief about Bifan and what mechanisms you have and how people can be able to get in touch and also be able to invest in for their businesses. That was really, really elaborate, and I believe that the participants have been able to learn and also to get some of the areas they can be able to venture into. At this time, we are going to have a poll. It's going to be done by Inga, just for us to be able to get feedback from the participants. We have 2 questions for you. You are going to help us understand. Maybe you can use 1 word or 2 words to explain on the questions that are going to be coming on your screens. Inga is going to help us see how we can be able to go about it. On the chat, I see we have a metric that has been shared. So feel free to click on your chat, click on that link. And then once you click, you are going to get an ID that you will be requested. You will be able to fill it. And then from there, you can be able to just give us a quick response to it. And then we will just be screening it. So you will be seeing as the responses come in. And then from there, we are going to be able to proceed on. So thank you very much for that. Welcome, Inga.
Thank you, Mariam. I can see people already voting, so that's good. We'll just give it 1 minute and then we'll move to the next question. Thank you. If you're having problems on how to vote, just click on the link on the chat, and then you'll enter that code, and then you'll see this first question, and then you can give your answer based on yes or no.
There are quite interesting results there, but yes, we have people who have really applied for funding, whereas we still do have people who have not been able to apply for funding for their projects. And this is a great opportunity for us as we are going to learn on how we can be able to apply. So if you have not applied for any, don't feel shy. You are in the right place. If you have applied, you're also in the right place. You'll get to learn more and also see how we can be able to experience this venture. There are many opportunities, and we are looking forward to seeing how does it go about, where do we start, or how do we start doing it. So thank you very much. Inga, you can maybe give us the next question, and I think people can be able to respond. I see Wycliffe is saying no. He has also not been able to do application. So on the next question is, what challenges did you face while applying for funds? So for them that have applied, you can tell us what challenges you faced. And for them that have not been able to apply, what challenges, what has been making you not to apply? Why have you not applied? So you will still click on the same link and you will get it will pop up, and then you can be able to enter a word or 2 just to say why do you think that you've not been able to apply, or what challenges have you been able to face?
Thanks, Mariam, for that. Just to make that clear, use just 1-worded answers or just 2 words to describe your challenge. It could be lack of funds, or as someone has already put in their vote, restrictive, odious, and complicated.
We can share any word you think that has been a challenge to you. What has made you not to be able to access. Maybe it's your model of business. I see that coming in. I see others are saying it's because it's a lack of information, high demand, not must support, complicated, restrictive, complex. Yeah, those are so many, some of the things that people are facing. Others is business plan, others is criteria, others is financial models. Those are very great words to describe the challenges we've been facing, and I believe that you're going to be able to learn. Not being shortlisted in the selection process. Someone is writing that on the chat. If you're getting challenges, you can also drop it on the chat. We are going to be able to see it and also let everyone see your point. So we give it 2 more seconds, and then we will be done. But these are very informative challenges, even as we get into learning of the models that are there and also how to develop it. Some could be fear. Maybe you are afraid of how to start writing. Maybe you don't have the writing skills. Those are some of the challenges that are facing the sector, even in applying for the funds. Some, it's the requirements. Maybe some funding opportunities have many or high requirements and you feel you're not right yet there. So those are, I'm just mentioning a few of the challenges that I also feel have been facing the sector. But yeah, thank you very much. At this time, we are going to close our metric or our polling metrics. And then we are going to have the presentation now from one of us. He's also a mentor from Bifan. He's called George Theuri Maina. He's going to give us a presentation on how we are going to do bankable proposals. And let's listen. If you get any question, let us write it on the chat. They are going to be addressed. And also let us see how we can be able to get opportunities for our SMEs in the clean cooking sector. So welcome very much, Mr. George. You got the floor for us. Thank you.
Thank you, Mariam. Mariam, I hope I'm audible.
Yes, George, we can hear you.
Okay, okay. Thanks a lot. And thank you for this opportunity, CCAK, the members, and also Bifan for this yet another webinar on financing. Maybe to start, we had another webinar in the course of the year. So we were discussing more on financing for clean cooking ventures. So today we'll be covering more of how to develop bankable business proposal for financing. So maybe starting from the poll that was shared and some of the answers that I think I noted. Say not being shortlisted in the selection process, investor priority, lack of information, maybe I had, but there were quite a number of answers. So I think I'll also, what I'll be presenting, I'll also be addressing some of them. So let me just share my screen briefly. I hope everyone can see that. We just put it in. To
yes,
start with,
yes, it's good
it's visible.
Yes.
Okay. So I think there was a study carried out in 2019 by the Ministry of Energy. Also, CCAK was involved. I think it was carried out by. It was in 2019. So, and some of the facts that were arising in the clean cooking sector. If you look at the first chart, the trends from 2000 to 2020 of the various technologies. So the red line up there, that is firewood. Down here you see the other fuels and cook stoves. But an interesting thing is that from 2000 to date, there's been a slight decline in firewood usage, which still comprises, on a national average, comprises of 65% of the overall house, based on the household survey that was carried out. I'm sure here I've highlighted quite a number of the technologies that the members here carry on, from biogas to the cook stoves, be it ethanol, be it firewood and charcoal cook stoves. And then also looking at the various fuels that also the members, you as CCAK members, be it you manufacture or distribute in your line of business. So maybe going into the challenges that I think this image is not so clear, but trying to evaluate in terms of funding into the clean cooking sector. So this was a study by Energizing Finance, I think by SMAP. But maybe I can go to a subsequent, still on more on an African level. So this is like an overview in sub-Saharan Africa of AFDB energy financing, looking at be it the overall energy equation. So we are looking at electricity, off-grid systems, and clean cooking. So you see, clean cooking is still lagging behind in terms of the financing. It's the green line at the bottom, of which electricity takes the bigger share. Before we start, I usually like giving scenarios in terms of what are the various needs that a company or you as a business owner, as a project developer, you are looking for funding for. So looking at 4 scenarios. So one is be it a cook stove and ethanol company. So it's been running a pilot. So it needs funding to scale up factory equipment and all that. Second one is a briquette manufacturer. So it's gotten some tenders from KTDA to supply massive quantities to the tune of 2,000 per tons. So it needs close to 150,000 to be able to meet that tender. The third, still be it the briquette factory still, but now it needs to expand on its equipment and machinery so that it can be able to fulfill. Then the fourth is a new technology, so it's more of piloting. So it's an LPG company that has innovative PEGO system, of which it needs some funding to pilot. So all these are, there are obviously other scenarios of which the funding may be required, of which now, if you look at maybe classifying the scenarios of which we looked at, they may fall into an aspect of you want to sort out cash flow challenges in terms of inventory, in terms of short-term capital needs. You're looking at capital investments in terms of buying real estate, capex, and also general expansion to other countries. And then you are looking at product development. So it may be a pilot, or you may be iterating on your existing product. So this is just to give context when we now start in terms of now talking about developing bankable business proposals and also bankable business projects. So, and also, so now on this one, we look at if at any given time that you're looking for financing, your business is at a given stage. So number one, are you starting out your business? Are you at launch? Number two, have you gotten traction in terms of sales? So you are looking for capital for growth. You are looking for capital for maybe to sort out working capital issues. Maturity still can be about the same thing. Or finally, at times you're looking for new investors to come into your business. Of which if you look at that chart, we've segregated, is it a startup, a venture, growth, or at mature stage? And at each given stage, you may be looking for, depending with the stage at which the company is at. So at a really young stage of a company, you are mostly looking for catalytic kind of funding in terms of grants or equity. Because in terms of if an investor tries to look at the risks in the business, they are high. So also you want more of long-term capital. So when you get to, you can now look for debt. Still, you can have some bit of grants or convertible debt. And at mature stage, still you can be looking at debt, equity, and even at mature stage, maybe some of your existing investors may be looking to exit. You may be having some debt which you look to retire. So going back to the presentation that Patrick presented, the second last slide he showed was a slide on the scoring criteria that Bifan uses. One of the things about the clean cooking sector is that I wish we would have we would have a poll, but maybe I would like to see in the comments how many of the clean cooking ventures have received funding from the local banks vis-a-vis in terms of grants, in terms of debt from external partners, and also equity from external partners. So now, which now brings us to now the equation in terms of, so for this, when we are trying to look at developing bankable proposals, so I'll give it from the point of view of Bifan, but this is also applicable generally to, even if you look at most calls for application or calls for funding that are out there that are business oriented. There's a certain format. If you look at, is it KCSC calling for, or KCV calling for funding, calling for application? Is it AECF calling for application? So there's a certain format that, in terms of that, be it the investors or these organizations kind of look for. So in any proposals, at the first point of interaction. So if you look at also what Patrick alluded to, in the aspects of you can have either solicited or unsolicited application for proposals. So like, and then also you can have, as Bifan we do it on a rolling cycle. So be it on a quarterly basis, we call for application, but they go on throughout the year. So the first thing that usually is there, it's more of the project description, of which you can have the project description, ownership, and also describing your management team. So this is more of the summary of the overall project. So you are looking to, at a first glance, so somebody evaluating your proposal can be able to understand who are you about, as in who is this company who's applying, who are the owners, what problem are you trying to address, is it, if just a case example, if you're looking at cook stoves, maybe it's an ethanol company looking to get into clean cooking, so you're looking to solve indoor air pollution. If it's be it briquettes, you are looking to displace wanton destruction of forests, be it in the schools. So what is the problem and you're trying to address? So then also location is also critical. Then you are looking at also the time frame. So at that given point, where are you? Where do you want to go to in the future, and also what milestones have you covered? So giving a full summary of your business. It's also so at a first glance, the person who's doing the evaluation can be able to understand. So, and also finally, what resources do you need you're applying for, and also the management team that's running the show in the business. If we come to market analysis, it's also good to understand, to see that, to show that you understand the market you are speaking of. If you are speaking of if you're speaking of the clean cooking sector, do you understand the level of saturation? Do you understand the level of opportunities that is in the market that you are proposing to? If you are speaking of to do biogas in the city, and then this is a product that requires both space and feedstock, is there a market that can be that you can get where you are describing that you want to go to? How is the competition? Do you have a good understanding of the competition in terms of who they are, pricing of their products, your competitiveness in the industry, and mostly also, do you understand your total addressable market? Going forward, we look at the technology, business model, and growth strategy. In the initial strides that we started with, clean cooking involves a number of technologies, and I think, as Bifan, as Patrick also stated, is that Bifan, we are technology neutral. So yes, you do understand your technology, but also we would, the investor would like to know more about your technology. If you look at efficiencies, how efficient is your technology in terms of the market placement of today, in terms of compatibility with the addressable market you are going to, in terms of if you're looking to set up an industry, is the technology you want to set up in available? If it's you are looking, maybe a case example, you're looking at electric cooking, and you're speaking of taking that technology maybe to a place like Mandera. Is there grid electrification too, where you want to take it? So looking at the various aspects of technology is also important. Business model involves quite a number of things, and I'm sure you are all conversant with the business model canvas. Looking at the structure of the company, the required supply chain, the marketing and distribution, the human resource, the channels, and the interaction of the various components of the business. If we go to the financial overview and investment proposal, at this stage we have to evaluate to see that you know your numbers, and based on maybe can share maybe experience of some of the proposals that we see. The basics is that number one, there are the known numbers, as in if you're a company that has been in operation, and you find in most proposals is that you are requested for, you have your audited accounts in place. If you look at also the financial overview, do you have like financial management structure in place in terms of personnel, in terms of systems, controls? Financial also, you look at the structure of the company in terms of who, as in how is it structured in terms of who are the owners, where are they, as in the invested capital, the debt position of the company. And a key thing also in proposals is what we say is the developer's skin in the game. A case example is you bring about a proposal, you're looking for be it 500,000 or 1 million USD. it's a new project that you want to invest in, or be it an existing one, but your skin in the game maybe is 10,000. So if we do our calculation in terms of leverage, how that one now comes into play in the sense that the investor is expected to put in more than you in the owner of the game. So that one brings about the question in terms of also understanding what type of investment are you looking for? Because if the investment mostly is even greater than what can be secured, then we'd have to see maybe a mix of debt and equity. Because given that, just a case example of what I gave, you're looking to get $1 million USD, but the skin in the game is 50,000. So there we find that maybe there's a mismatch, but there's still potential in the business that you want to carry out. But the kind of investment also, the type of investment you're targeting also has to be in tandem with also the risks that that you are undertaking. An overview of the projected cash flow is also important because the investors also want to know, if you are looking to get a given amount of financing, what is the expected cash flow, so as to calculate in terms of the repayments, in terms of also the profitability, and also to understand the growth trajectory of the company based on the cash flow. A key critical thing here is that being realistic is also important, based also on your understanding of the market. Moving forward in terms of identification and mitigation of risks, it's good to really boil down and also understand the risks of all the business areas that you're going to venture into. So you look at what are the short-term risks, what are the long-term risks. You can look at be it internal risks and also external risks. So if it's internal risks, those ones you can manage. External risks, what are the mitigating factors that you're going to do? If I am to look at risk maybe in the clean cooking sector, if I look at maybe the briquette industry, a case example of non-carbonized briquettes. So the key raw material obviously is be it sodas, be it bagasse. So, and one of the big risks that has emerged is lack of availability of the raw materials, and also increasing competing use of be it sodas. You find that you are now competing more with chipboard factories. If it's bagasse, you find that some of the factories are starting to develop alternative products for that. So if you bring about your proposal, how are you going to mitigate that? Are you going to, this is just a hypothesis, are you going to grow a suitable feedstock somewhere else? If it's a biogas project, you're also looking at feedstock. If it's a large scale, I'm assuming it's a large scale or project, how are you going to ensure if it's you committed to getting 100 tons of biogas, feedstock from Dandora? How are you going to mitigate in terms of competing use? Are you going to get an exclusive right of use for the biogas resources, or in terms of, so you get into an arrangement with the county, or how are you going to ensure that your plant requires 100 tons and you always have 100 tons available? We can also evaluate various technologies. So how you present that one in terms of risks, and also internal risks. If it's in terms of you are doing a supply and distribution, are using technology, be it to mitigate on supply risks in terms of thefts, and also verification of sales. How are you going to do that? If we now finally go to the socio, environmental, and gender impact, most projects that nowadays are funded are required to be within a given, or to be not to harm, to bring about damaging impact to the environment. Locally, we have the NEMA standards that are applicable for projects. So once you bring a project on board that requires, have you conducted your environmental impact assessments? Internationally, mostly we see that we have standards, like if you go to the African Development Bank, I think they follow the same standards as the IFC. So have you met the standards, and is your project neutral? So maybe, sorry if I was fast, I think we just had 30 minutes for this. If we go to now maybe a conclusion, you now also give a summary of your overall project, summarizing the various aspects, and so that the evaluator can also be able to know what your project is really about. But mostly that one has been covered in the initial first, the first component of the project description, ownership and management. So I think before I conclude, it's also good to touch on the financial model, because mostly this is given as a separate document. The first thing, I think, as I mentioned, is that in a financial model, you also need to, because mostly I think here I'm dealing with existing or going concerns. So you've been in operation for a number of years or a number of months. So you have traction. So you need to indicate the historical data. So the current financial situation of your project. Then from there, you also need to indicate, do you have any future investments committed? Of which the figures in the financial model have to be in tandem with the project proposal. So you don't have a given set of figure in the project proposals, then in the financial model, they are different. Then once you come to this, in a financial model, because you are projecting, you always use some assumptions, be it on the expenses, be it on the planned capital expenditure, taxes, or other, and also even on the revenues. These assumptions, they need to be clearly stated. And one of the things is that they also need to be realistic. If you look at maybe, I think one of, in the poll, one of the things that somebody said was not being shortlisted in the selection process. At times, the figures that are in the proposals, they are not realistic. So you find that you are aiming at a total addressable market, of which looking at the numbers does not make sense. You're aiming at a given revenue that is not also realistic if we do also our evaluation. So that one has to be really on point. The time frame or the financial model also should be within, if you say that if it's debt financing that should cover, be it 5 years. So the time frame of the financial model should cover that. If it's 10 years, should be within that period. Then finally, also in terms of, we also do ratio analysis. It's also good to understand the various ratios that are required, be it the internal rate of return, the net present value, the debt service coverage ratio, and also in a financial model, mostly is what we say is that the common format is the 3-statement model. I think that that was more on based on how, in terms of how Bifan mostly evaluates. It gave the various components how we score proposals, of which now this also is a guidance in terms of the various, if you meet the various proposals out there, they usually use such a format to score the various proposals that are presented to them. So finally, you've gotten through shortlisting, if I may say that. And I think having been involved in some due diligence, so after you go through shortlisting, after that mostly is the due diligence. So shortlisting is usually the first stage. So even after that, there's usually more analysis in terms of your business and also your numbers. So I also find that a number of ventures, they also fall out in during the due diligence. So because you see in mostly once you present your proposal, it's mostly analyzed from far. But once you've been shortlisted, now the number is smaller. So then the analysis now become more microscopic. So we want to understand now what is this company and who are they about? Who are the team and the competencies of the team? If you say that you have this number of facilities, if we come to the ground and we find that what you indicated on the proposal and on the ground is a bit different, so that can also be an issue of concern. And I think also if we evaluate also based on the market, also customer evaluation, is what you presented also in tandem with what is on the ground. You indicated that you've done traction of be it 100,000 cook stores, you have tenders with A, B, C, D, but on evaluation, we cannot find those numbers. Is it okay? So for me, I think what I also tell most ventures is that each business has a vision. So if you have some traction and there's this vision, and you can convince people that to achieve this goal, this is the financing you need. If you are realistic with your number and also with your projection, and then we evaluate based, we see that the vision as indicated has a probability, then you stand a higher chance of receiving that funding. So I think for the next slide, I just go over a bit fast. This we covered in the last webinar. So if you look at the various kind of types of funding, be it from venture or debt financing, the kind of funding partners out there, private equity, the difference between venture and private equity. This one we covered during the last webinar, but I think I also wanted to maybe also highlight on grants and also on carbon finance. One of the main things I've seen in the clean cooking sector is that the industry has shifted. Previously, there were quite a number of grants available for the industry, but mostly there has been a shift also in the donor sector, of which the talk now is that from aid to trade. So the key thing also that be it the donors or the possible investors are looking for is sustainability. So you have to prove that you are sustainable, but also as in you have to prove that you have impact, but also you are sustainable. And also one of the things I think I've also seen is that the trends in terms of the technologies, there's been a gradual shift, also where the funding is being directed to. So also as a business owner, it's also key to keep in tandem, improve on the products of the technology. And also, if you look at the various funders, also it's good to understand what do these funders target. Because like for some of the funders, you find that LPG is considered clean cooking fuel, but for some of the funding entities, they consider LPG as a fossil fuel, so they may not touch it. For some of the technologies, you find that briquettes may be considered a clean cooking fuel, but for some of them, they say that they are not touching on biomass fuel. Another thing also to consider is what is the amount of funding that the amount of funding and the type of funding that they offer. Some of the funders, they offer catalytic funding in terms of grants. For some of them, they offer kind of seed capital, which they also require to take an equity stake in the business. Others, they can offer a mezzanine mix of debt and grant. So you also have to understand, and then finally also understand the amounts of funding that these entities also of what we call the ticket size. So like for Bifan, we usually say ticket size is usually between $1 million to 50 million, but as Patrick also indicated that for clean cooking, we can even go lower than the $1 million, if you can even speak over 500,000 USD. So also understanding what are the ticket size, understanding also the cycles, because some of them they call for funding in distinct cycles. Others have an open kind of rolling applications, so they are open throughout the year, or they're open in given quarters. I think also the nature of the funding, we covered that. It's also good to really understand the nature of the kind of funding you want. Is it working capital? Is it CapEx? So you don't want to fund, go for short-term funding to fund long-term kind of investments, of which so you need to have a good match, not a mismatch of funding. So as I wind up, I think those are some of like for the ones giving grants. Then also we can look at RBF. Quite a number of instruments are there. We have COSAP. I think the Kalobei Challenge Fund just issued the other day, and some other organizations are also listed there. Carbon finance also is of interest. But one of the things with carbon finance is that it has a lengthy application process before you get the funding, and then you also have to, given the size of most ventures, it's also costly. So you also have to go through maybe some organizations. I know there's a CO2 Balance, Uganda Credit Bureau, of which we had a webinar still on the same on carbon financing in the course of the year. So the various standards, crowdfunding is also of interest. It's emerging as an unique funding stream for organizations. But what I've seen in crowdfunding mostly has been mostly in solar, clean cooking. I've not seen a number of crowdfunding ventures in clean cooking, but maybe that one I would seek more advice from you as practitioners on that. So maybe to wind up, I would also say on consumer financing, because at the end of the day, you want your product to move. So if, and then also, one of the biggest challenge also is usually on affordability. If you can have your consumers advanced credit so that they're able to afford the products or services that you're selling, also helps in moving, increasing your revenues. So with that, I think I'll wind up on that. Then maybe we can address on some of the questions.
Great. A lot of info there from our colleague, that is George. Thank you for the informative session. I think that should be done in more than the 30 minutes that you had. I have tried to jot a few things, but I'm really excited about the process. Indeed, one thing that I've picked is that as I develop a proposal, or as we develop proposals, is that we should be as realistic as possible, not because a grant or a call for application has a lot of money, then I feel that I should apply for all that money. But I should be realistic with my business, the progress, the growth in my business, and then I'm able to apply for what I can be able to get funding. So I think that is a challenge for maybe most of us, being that we are applying for funding and maybe we don't reach the threshold of what was exactly being said, but also the guideline of the proposal, mainly ensuring that as we do the submission, we have done the description well, we understand our markets, we understand the technologies that are there, we understand the risks, the financing concept part, and also the social and the gender and environmental bit. Just being able to look around all that as we prepare proposals, I think that is really fantastic and important for us to note. Thank you very much, George, once more for the elaborate. I know I rushed you a bit, but I believe the members have been able to learn something. So if you have your question, you can raise your hand. You can also do it on the chat. Even as I raise the questions that have been there, maybe we are going to respond to them faster. I have three or so questions. One is from Beatrice. She's asking, what does convertible subordinate debts mean? Then we have another one from Rochelle. She asks, how much does the process change from cooking projects to other renewable energy projects? And then we also had another one from Beatrice asking, are you going to connect the selected companies to climate financing opportunities? And then I think I got another one. Yeah, I think those are the messages I have as for now. Maybe George, you can be able to respond. You can also drop your question on the chat, and then we are going to continue on the same. Maybe you could answer briefly, then we will continue.
Okay. I think Beatrice, convertible debt and subordinate debt. So convertible debt is maybe debt that obviously from the onset you come into an arrangement that you'll take this money and you'll pay it after a given duration, but also it has a provision that part of it can be converted into shares. So subordinate debt is debt that is repaid after all the other creditors have been repaid. So the other question was on, I'm trying to check the charts.
There was one on, are we going to be connected to the funding companies? And then there was one for process of changing from clean cooking projects to other renewable energy projects. How much does the process change?
So for
I could read that again. How much
Yes.
does the process change from cooking projects to other renewable energy projects?
Okay. So the process is the same for all renewable, like for Bifan. If you go to the Bifan website, the process is it's the same. We usually have the same process for renewable energy companies. We have given the criteria of which how we select the companies we are going to support. Then there was a question on are we going to connect
the companies to climate financing opportunities?
Yes, because one of the things that Bifan does is on investment facilitation, and I think as Patrick was doing his presentation, he mentioned that to date globally Bifan I think we reached the $2 billion mark. Patrick, maybe you can confirm on that, in terms of funding to renewable energy enterprises, or climate enterprises. Patrick.
Yes, I can confirm that through our whatever project you have, whether it is cooking stove, green cooking stove, so long as it's a renewable climate change component, you would apply it through our websites, and we can connect and support you after appraisal. So that's true, whatever we're asking you to do.
Thank you very much, Patrick and George, on that. We have another question. A good presentation by George. A question: if you are able to get equity funding, where an investor who puts in money in the company by getting shares, how does the investor exit from this arrangement? Maybe George, you could go for that.
So each investors, usually they have their own criteria of why they are coming into the company, and I think if you see that some of them, they specify that will exit after 7 years, but we would want to have made 3 or 2 times our investment. So that one is usually indicated in terms of we are taking this risk, but our investment plan as a company, as an investment company, is that we usually exit after 7 years. And during that duration, this is our expectation. So they'll help you structure. So even if whatever the funding request you are doing, the evaluation will be in terms of, does it meet our criteria as an investment firm? I hope that was a question from Mohammed.
Yeah.
Yes.
Another question from Lorna. So after preparing for all this business bankability, why do we need the Bifan? Maybe you could help us understand how Bifan helps us on this.
Okay. So you have a good project. This is just a hypothesis or a scenario. So you have this project of which you are a developer. So you've gotten the rights of maybe securing or securing, just trying to think of a scenario, of a project scenario. But so there's you, the entrepreneur, and then there's the Bifan. So and as we started, we indicated that for us, we work with various kinds of investors. So from development finance institutions to high impact net worth investors. So, and for these kind of investors, and I think that's why we say that our ticket size usually is from $1 million to around 50 million, or we can even work lower. But for these types of investors, they usually like structured projects. So for us, we act as the in-between there to help you structure your project. And I think, as Patrick mentioned, this is a service that we don't charge for for the selected companies that we offer. So we help in the structuring, but also we also help in the facilitation, because also for our investors, we want value in the sense that for them, they have money to invest, but also they want structured projects to invest in.
Thank you. We also have one from Dorothy. What's the interest rate if funding is from a bank through Bifan?
I'll answer that one, and also I'll leave to Patrick. So interest rate is usually subjective based on risks. So and like currently, I will not say for about local banks, but I'll leave Patrick to answer that. But I'll say that the risks of the project determines the rates. Patrick.
Yes, thank you so much for that question. It is very important to understand one or two things that Bifan, we do not fund projects. So what we do is that we are like a midwife. You have a project, we assist you to develop the proposal, the bankable proposal for you to present to potential funders, whether it is your own funder or the funders that the investors that we in Bifan have, because we have a pool of funders. So first of all, the interest rate will be, as Georgie says, will be dependent on individual financial, based on what the returns of the project are. So that one we cannot decide about it. So we, as I said, we are supporting the business proponent for the proposal. If the proposal comes through our pipeline, we'll be able now to expose your proposal to a big number of potential investors. So really, our work is really to facilitate that. So we would accept if you have a financial. For example, I'll give you an example. If you have a project now, you go to Equity Bank or KCB or Cooperative Bank, and they are having funds for these green projects. They'll request you to have a proposal, a bankable proposal, and that's where we want to support you. And as you know very well in Kenya, to develop that proposal may cost you not less than maybe on the lower level, maybe a judge can say it's about 500,000 shillings. So that's where we come in.
Sure.
Thank you.
Thank you. Thank you very much, Patrick, for making it clearer. It's just to help us develop proposals. As we said, there are people who have not done development of proposals before within the sector, but there are also them that have done, but there is just a way they can assist us in refining it, and also within ensuring that all that investors are looking for or are searching for, the criteria, the different criteria that they use to be able to see that this your proposal is accepted and it also gets to be funded. George, we have a final one. There is a member who is asking that most of our companies within the clean cooking sector are below 50, are at a range of 50K to 100K USDs. Does this mean then we do not qualify for Bifan requirements, or how do we go about it?
Okay, I would say that in many industries, there are various levels of funding that companies look for, and I think as much as they are also funders, there are also organizations which help companies through various levels. That's what I can say. So the question was
50 to 100.
Oh, 50 to 100.
Yeah.
Okay. So I would say that we also do evaluate on a case by case basis. Yes, we do have that threshold, but for some of them we also do evaluate on a case by case basis. Sure. But also there are also some other players also in the sector who offer that kind of support within a given range, be it 50 to 100 or 100 to 500, depends. But also we do evaluate on a case by case basis.
Thank you. Someone is concerned. Does it mean that Bifan gets a commission for assisting the companies to invest? And at what percentage is the commission of assisting to be invested? Yeah.
Patrick?
That is very important, that question. I don't understand, but from what I get from the questionnaire is, do we charge any commission for the project to be given to the financial?
I think not to get it to the financial, but after they get funding.
Oh, okay.
If they qualify and they get, yeah. Okay.
There is what you call a success fee. A success fee, if the project is introduced to the investor and the investor, there's a success fee, which should be negotiated with the project, the consultant who have been identified by Bifan. And that will be now between the consultant and the project owner, not Bifan.
Okay.
It is now it will be now an agreement with the consultant and the owner of the project. Because there will be success fee after that. You know, they will now follow up whether how to go about on the financing and but not Bifan charging the commission. Thank you.
Okay. Thank you very much for that clarity, Patrick. I see our time is getting out, but I still have a few more questions. Rafiji is asking, what is the cost of funding, USD or local Kenya shillings? If I get it clear, I'm not sure if I got it well, but he's asking what is the cost of funding. And I think George had said we have a range of funding, but maybe you can make it clearer. Yeah, George or Patrick, one of you.
I think George can clarify that.
Yeah.
Every project, all the potential financiers have different, just like the banks and the other investors, they have different charges for their interest rate. So I think that one will be now dependent on the project proposal, the returns, and who is funding it. If you look at some of the commercial banks in Kenya, the rates are different. So I don't think that as Bifan we can dictate. It will all dependent on the individual investor and financier.
Thank you very much, Patrick, for that response. We still have one more. What does the investor have to do to join the Bifan network? And I see we have been sent some links and a few things, but Patrick, you can still tell us more about that, even as we near the closure of our meeting this morning. Patrick.
Yes, I have a short presentation on how to apply for something, but we cannot give it. What I'll do is that you will go to our, we'll give you our website, www.bifan, which your Inga can project it there. You log into that website, you see how to apply. The first thing is you have to put just apply and give your details of your project. Then it will be, we will respond to you. And then now your project, now you'll be asked to develop, to submit your data on the portal. Everything we do it online. So if you go to our website, you'll see a section where you need just how to apply.
Yeah.
Yeah.
Thank you very much, Patrick. I know time is not on our side, but I see Inga has shared the links to the website and also how you can be able to follow them and see the quick steps. Also from CCAK, I know maybe you're wondering, this is CCAK and also there is Bifan. It's a partnership that we have with Bifan, and the reason for this is that we want to expose our members to opportunities that exist there. Maybe some of you are not aware that there are financing advisory networks that exist or financing networks that exist. And this was just one of them for us to let our members understand and also learn that there are opportunities like these ones that exist. You may be able to go dig deeper about them, learn who they are, see how your business can be able to grow. I know each one of us as an investor or a business person, we are looking on opportunities. How do we make our businesses better? How do we improve our funding? How do we grow? So it's just an opportunity for us to let you understand or see the opportunities that exist out there. You can be able to learn more about them. If you have queries, you can reach out to CCAK. We can be able to link you more up with Bifan team. And if you really want to learn more what Bifan can do and how they can support, we can be able also to link you up. So this is just an opportunity to help our members out there understand, how do I develop a proposal? How can it be bankable? How can it be receive some funding? So that was the main aim of the webinar. So I saw someone was asking, so why Bifan and all this? But it's a partnership that CCAK and Bifan have, just to be able to create awareness to our members and to enlighten them of existing opportunities that exist out here. So I see we have Someone is saying, Rona, I think he has tried to log in and saying that the Bifan site locks data very quickly. So I don't know, maybe Patrick, you can say something about that. She's saying that the website locks data very quickly. I don't know if after you key a few minutes it locked or something. Maybe you can help to elaborate that.
I think, please, I'll send you, I'll give you my email after this so that you can, but I am confident that we'll be able to get through it. Inga is our consultant here, and she'll be able to help us.
Great. So as we come to the closure, almost the closure of our meeting today, it's been great me being your moderator and working with helping you to really understand of how we can be able to develop bankable proposals and opportunities that exist for the sector, that is the small and medium enterprises in the clean cooking sector. There is a lot that is happening out here. We only need to be open and also to really seize the opportunities as they come. Let us learn, let us be open-minded, and let us see how we can be able to move this sector to the next level. We need to invest, and in investing, you need to have all the knowledge, you need to make the right decisions, and you need also to have the right people with you so that you don't invest and then your money is all gone. So it was a pleasure for me to have you and also to host our partners from Bifan, and that was really great. Thank you very much, Patrick and your team, George and Inga, that was great. And thank you also CCK members and all other members who joined our webinar today. We really do appreciate. Let us keep in touch. Let's keep connecting. We are going to be sharing the presentation, and also we will be sharing the recording on YouTube. You can be able to also listen in and learn more, go through the presentation, see where you can get some clarification, and we'll be able to connect further. So at this time, I know David is in another meeting, so I want to appreciate everyone and to say thank you very much. And maybe Patrick can say a closing word as we close.
Thank you so much, everybody, for this participation. I have given you my email there. If you have any challenge, please send me an email. We really want to look forward. We want to get more people supported. We can also bundle projects you may have because of the threshold. As George indicated, if you have 3 or 4 projects, we can bundle them together. And if you have any challenge that you have, please let me know. But thank you so much. And when you go to our website to apply, at the bottom, you'll be asked, how did you get information? Please indicate that you got it from our coordinator here so that you'll be able to follow up. And thank you so much. And have a nice day. God bless you.
Great. Thank you. And all have a nice day, blessed day, and also a lovely weekend ahead. Thank you.